I think I messed up. Wait, I'm sure I did. Welcome to Young Elder TV, where UFOs, religions, Anunnaki, and black youth collide in a cosmic comedy. Meet Marcus, our fearless leader. He's an aspiring scientist and part-time alien enthusiast. Then there's Maya, his sister, a no-nonsense lawyer who secretly believes in ancient astronauts. Oh, and don't forget Grandma Pearl. She swears she had tea with an alien once. And finally, their quirky neighbor, Mr. Thompson, convinced he's a reincarnated god. With 3 million fans already hooked, Young Elder TV blends laughs with galactic mysteries. Ready to join the fun? Hit that subscribe button and dive into the cosmic chaos. Young Elder TV, where the stars align for comedy.
What's going on YouTube? Listen up, Young Elder Gang. This is Dr. Sarah O'Connor at you with another banger. Please make sure you like, subscribe, and share this video, fam. I hope this video get at least 100,000 likes. In this video, you will find history, definitions, scripture, information, and best of all, what we Americans have been deprived of from the beginning, the truth. Keep in mind this content used in this video is intended for educational and informational purposes only. We will give you the total truth as we best understand it today. Be sure to hit that like button, Young Elder Gang. Hit that subscribe button if you're new to the channel. Hit that bell and don't forget to check back with us every day for new content. Alright, let's get started. Hey there, family. Gather round and let me tell you about Big Mama banking system. She was a legend, see? Word on the street was that Big Mama had stashes of gold hidden all over South America and all over Africa. Some folks scoffed, but others, we knew better. Big Mama was as real as the sunshine on a summer day, and her hidden treasures, they were more than just stories whispered around a campfire. They were a testament to her legacy. Now, you might be wondering, who was Big Mama? Well, that's a story for another time. But what I can tell you is this: Big Mama was all about family, and her family wasn't just blood, it was everyone she took under her wing. See, Big Mama knew a thing or two about hardship. She knew what it meant to struggle, to need a helping hand, and that's how Big Mama's bank was born. It wasn't your typical bank, mind you. It was built on trust, on community, on the idea that we're all in this together. Big Mama's story is about more than just gold, you see. It's about the power of community, the importance of family, and the enduring strength of a legacy built on trust. So buckle up, because I'm about to take you on a journey through banking hidden history, a journey to uncover the truth behind Big Mama's legendary gold stashes. Now, to understand Big Mama's story, you gotta understand a little something about history. Around 2000 BCE, temples in Mesopotamia began lending grain and other resources to farmers and merchants. These temples also kept records of transactions, which led to the concept of bookkeeping. In ancient Greece, moneylenders and private depositories began to emerge. Athens introduced the first standardized coinage system around 600 BCE. The Romans established a network of banks and introduced financial innovations like bills of exchange. The Bardi and Peruzzi families dominated banking in 14th century Florence, and the Medici Bank was established in 1397. Banca Monte dei Paschi di Siena is the oldest surviving bank in the world. It was founded in 1472 in the Tuscan city of Siena by the Moors, which at the time was a republic. The Bank of North America was the first bank chartered by Congress in 1781, and the Bank of New York was founded in 1784. The Bank of the United States was chartered in 1791 to help deal with war debt from the Revolutionary War. The Fair Credit Reporting Act and the Equal Credit Opportunity Act were passed to make credit more accessible and prevent discrimination. Roland Moreno patented the first smart card in 1974, which led to the development of modern chip-based cards. Now let me tell you about the Rothschild family. Keep in mind, they are the front family, for the real Black Hand family called the Smiths, who are dark-skinned Moors. Like we said, the Rockefeller family are the front family for the Black Hand family called the Wyans. Each of the 13 Black Hand families has a so-called Jewish white front family to take the fall for them. It's really alchemy, if you overstand. Unlike most previous court factors, Rothschild managed to bequeath his wealth and established an international banking family through his 5 sons, who established businesses in Paris, Frankfurt, London, Vienna, and Naples. The family was elevated to noble rank in the Holy Moorish Roman Empire and the United Kingdom. The Rothschilds have been in control of the world's money supply for more than 2 centuries, Yet, most Americans have never heard of them. The family's business empire encompasses a diverse range of business interests, including investment banking, asset management, mergers and acquisitions, mining, energy, mixed farming, wineries, and charities. The Rothschilds are a family of Jewish financiers. The family's emergence in the world of high finance started with Meyer Amschel Rothschild, 1744 to 1812, founder of and a moneylender at Frankfurt am Main, financial advisor, 1801, to the Landgraves of Hesse-Kassel, agent of the British government in subsidizing European sovereigns in wars against Napoleon. Meyer Amschel Rothschild's 5 sons were Amschel Meyer, 1773 to 1855, who succeeded his father as the head of the Frankfurt establishment; Salomon Meyer, 1774 to 1855, who founded a branch in Vienna, Austria; Nathan Mayer, 1777 to 1836, who founded a branch in London; Karl Meyer, 1788 to 1855, who founded a branch in Naples, Italy; and James or Jacob, 1792 to 1868, who founded a branch in Paris. The Rothschild family was the dominant power in European investment banking and brokerage in the 19th century. Family members held seats in Parliament and in the House of Lords. They became barons in London, and they founded the Rothschild Natural History Museum, 1892. By 1815, Nathan Mayer Rothschild controlled the Bank of England and boldly declared, "I care not what puppet is placed upon the throne of England to rule the empire on which the sun never sets. The man who controls Britain's money supply controls the British Empire, and I control the British money supply." This became the Rothschild family's mantra: control the world by controlling the world's money supply. By the end of the 19th century, the Rothschild family controlled half of the world's wealth. In 1791, the Rothschild family gained control of America's money supply through Alexander Hamilton, the family's agent in George Washington's cabinet, when the family established a central bank in the U.S. named the First Bank of the United States, which received a 20-year charter from Congress in 1791. When Congress refused to renew the charter in 1812, the Rothschilds threatened the U.S. with a most disastrous war with Britain. The U.S. stood firm. Following through on their threat, a second war broke out between the U.S. and Britain. The British war effort was financed by the Rothschilds. When the war ended in 1815, U.S. finances were in shambles. By 1816, Congress passed a bill authorizing a second Rothschild-dominated central bank with a 20-year charter. Named the Second Bank of America, this bank gave the Rothschilds control of the American money supply again. In 1823, the Rothschilds took control over the financial operations of the Catholic Church worldwide. In 1832, President Andrew Jackson led a successful effort by Congress to retake control of America's money supply from the Rothschilds by refusing to renew the charter for the Second Bank of America. Not until 1913 would the Rothschilds be able to set up their third central bank in America. In the meantime, beginning in 1875, the Rothschilds, acting through their New York banking partner Jacob Schiff at the banking house of Kuhn, Loeb and Company, financed John D. Rockefeller's Standard Oil Company, Edward H. Harriman's railroad empire, and Andrew Carnegie's steel empire using Rothschild money. The Rothschilds also helped New York financier J.P. Morgan and the Drexels and Biddles of Philadelphia establish European branches of their respective banks in exchange for allowing the Rothschilds to control the banking industry in New York and therefore America. In 1913, the Rothschilds established their last and current central bank in America, the Federal Reserve Bank. This independent bank regulates and controls America's money supply and monetary policies. Even though the Federal Reserve is overseen by a board of governors appointed by the President of the United States, the bank's real control still resides with the Rothschild family. Not even President Donald J. Trump can break the Rothschild family's financial grip and influence on the Federal Reserve Bank. The Rothschild family's banking businesses pioneered international high finance during the industrialization of Europe and America. Rothschild banks financed railway systems around the world. They also financed the construction of the Suez Canal in Egypt. Additionally, Rothschild family capital founded De Beers in 1888, which is the largest diamond mining company in the world. In 1987, Edmund de Rothschild created the World Conservation Bank to gain control of land in third world countries, which represent 30% of the land surface of the earth. The bank assumes the debts of these countries in exchange for real estate that is conveyed to the bank. In 1992, former Federal Reserve Board Chairman Paul Volcker became chairman of the European banking firm J. Rothschild, Wolfensohn and Company. By 1995, the Rothschilds controlled an estimated 80% of the world's uranium reserves, thereby giving the family a monopoly over nuclear power. By 2001, only 7 nations in the world, China, Iran, Afghanistan, North Korea, Sudan, Cuba, and Libya, did not have Rothschild-controlled central banks. Until May 5, 2004, the price of gold was fixed twice a day at N.M. Rothschild and Sons in London by the world's main bullion houses, Deutsche Bank, HSBC, Scotia Mocatta, and Société Générale. In 2006, the Edmond de Rothschild Bank, a subsidiary of Europe's Edmond de Rothschild's family bank in France, became the first foreign bank to gain access to the Chinese market. The Rothschilds' domination of the world's financial markets continues to this day. You must know Franklin D. Roosevelt worked for the killer clowns. Executive Order 6102 is an executive order signed on April 5, 1933, by U.S. President Franklin D. Roosevelt, forbidding the hoarding of gold coin, gold bullion, and gold certificates within the continental United States. The executive order was made under the authority of the Trading with the Enemy Act of 1917, as amended by the Emergency Banking Act in March 1933. Did America, or should I say, USA Corp., consider the American people as the enemy? The limitation on gold ownership in the United States was repealed after President Gerald Ford signed a bill legalizing private ownership of gold coins, bars, and certificates by an act of Congress, codified in Pub. L. Tooltip Public Law, United States, 93-373, one which went into effect December 31, 1974. The executive order that required Americans to surrender much of their gold to the U.S. government. Robbing the American people blind. They say the reason behind the order was to remove constraints on the Federal Reserve in order to print more money during the Depression. The order was issued within a month of FDR's inauguration, and all Americans were required to forfeit their gold to the government. However, each person in the household could retain up to 5 troy ounces of gold bullion coins. Those who surrendered their gold were compensated with $20.67 per troy ounce, the spot price of gold at the time. They gave the American people paper for gold. Many were upset by this, as gold's price increased to $35 per ounce with the passing of the Gold Reserve Act of 1934. This order also led to the extreme rarity of the 1933 double eagle coin. As production stopped, all 1933 coins were ordered to be destroyed. However, about 20 were stolen before being destroyed. The extreme rarity of these coins led to one selling for over $7.5 million in 2002. The limitation of gold ownership was repealed in 1974 when President Ford signed a bill once again legalizing private ownership. The Federal Reserve Act of 1913 established the Federal Reserve System, the United States central banking system, and gave the Federal Reserve the responsibility of setting monetary policy. The law was passed by Congress and signed into law by President Woodrow Wilson on December 23, 1913, on Jekyll Island, where they auctioned off the last of the land, which they had conquered, from the original people of the land, who they had rocked to sleep. Keep in mind, Woodrow was a member of the Killer Clowns. This is when the games begin. The Secret Treaty of Verona is a forged document that was published in a newspaper in 1823 and falsely claimed to have been signed by representatives of Austria, Russia, Prussia, and France. The treaty was said to have been signed on November 22, 1822, and was used to support the idea that European powers were plotting to overthrow representative governments and the freedom of the press. The Federal Reserve Act was a response to the financial panic of 1907, which demonstrated the need for a central bank to help stabilize the economy. The law's key features include monetary policy. The Federal Reserve was given the responsibility of setting monetary policy, which it does through open market operations, the discount rate, and reserve requirements. Regional structure. The Federal Reserve System was established with a regional structure, with a supervisory board in Washington, D.C., and one Federal Reserve city in each district. Dual mandate. The Federal Reserve was given a dual mandate of price stability and jobs. The 1913 Federal Reserve Act created the Federal Reserve System, known simply as the Fed. It was implemented to establish economic stability in the U.S. by introducing a central bank to oversee monetary policy. The Federal Reserve Act is one of the most influential laws shaping the U.S. financial system. Meanwhile, the top-cited reason among all unbanked households for having no bank account is not having enough money to meet minimum balance requirements. When it comes to race and other demographics, the percent of households that are unbanked varies significantly. Single-mother households, 15.9%. Cybersecurity risks are a major concern for the banking industry, and banks must invest heavily in cybersecurity solutions to protect their customers' data and prevent fraud. To address these challenges, many banks are partnering with cybersecurity firms to develop more robust security measures. One of the major downsides of traditional banking is the potential for fees. Traditional banks often charge various fees for services such as overdrafts, ATM withdrawals, and account maintenance. These fees can quickly add up and eat into your savings if you're not careful. When I interviewed my customers, however, I learned that for many lower-income people, commercial banks are ultimately more expensive. The rapidly increasing cost of bounce check fees and late payment penalties has driven many customers away from banks, particularly those who live close to the edge. A bad bank is a bank set up to buy the bad loans and other illiquid holdings of another financial institution. The entity holding significant non-performing assets will sell these holdings to the bad bank at market price. Credit risk is the biggest risk for banks. It occurs when borrowers or counterparties fail to meet contractual obligations. An example is when borrowers default on a principal or interest payment of a loan. Defaults can occur on mortgages, credit cards, and fixed income securities. The most common cause of bank failure is when the value of the bank's assets falls below the market value of the bank's liabilities, which are the bank's obligations to creditors and depositors. Bank regulators view any ratio over 300% as excess exposure to CRE, which puts the bank at greater risk of failure. The banks of greatest concern are Flagstar Bank and Zion Bancorporation, according to the screener. Flagstar Bank reported $113 billion in assets with a total CRE of $51 billion. Banks earn money by lending out money that depositors have deposited, while charging a higher interest rate to borrowers than they pay to depositors. The difference between the interest rates paid and received is called the spread, and is the primary way that banks make money. However, banks actually rely on a fractional reserve banking system whereby banks can lend more than the number of actual deposits on hand. This leads to a money multiplier effect. If, for example, the amount of reserves held by a bank is 10%, then loans can multiply money by up to 10x. Banks charge fees for a variety of services, including checking accounts, financial counseling, loan servicing, and the sale of financial products. They may also charge annual fees for credit cards or lines of credit. Investment banks raise capital by selling securities and provide advisory services to corporations and governments. For example, when Facebook went public in 2012, Goldman Sachs was one of the lead underwriters and earned fees for facilitating the IPO. Banks also earn money from income on the securities they hold. On average, banks earn between 1% and 2% of their assets, which is known as their return on assets, ROA. Commercial banks make money by providing and earning interest from loans. Customer deposits provide banks with the capital to make these loans. Traditionally, money earned in the form of interest from loans often accounts for up to 65% of a bank's revenue model. When a bank fails, the Federal Deposit Insurance Corporation, FDIC, or a state regulatory agency will take over and manage the bank's assets. The FDIC will typically announce the closure. The FDIC will make a public announcement that the bank is shutting down. Sell the bank's assets. The FDIC will sell the bank's assets to another FDIC-insured institution, or dissolve the bank. Reimburse depositors. The FDIC will reimburse depositors for up to $250,000 per depositor, per bank, per ownership category. Notify customers. The FDIC will notify depositors by mail if another bank acquires the assets. Transition customers. If another bank acquires the assets, there will be a transition process for new customers to learn about the new bank. If a bank fails, customers can expect the following: checks and automatic payments. Customers will need to work with creditors and lenders to make alternate payment arrangements. Safe deposit boxes. If another bank acquires the bank, the branch should reopen the next business day and customers can retrieve their items. If another bank doesn't acquire the bank, the FDIC will send instructions for how to get items. Bank failures can have a negative impact on the financial system and the economy as a whole. However, the impact on the broader economy is usually limited. Every time you make a deposit of $1, the bank can loan out $10 to one. If you put in $10, they can loan out $100. If you put in $100, they can loan out $1,000. Another thing you might not know about the bank is that they file a 1099-A on your behalf every year. What's the purpose of Form 1099-A? Form 1099-A is an informational return that the IRS requires lenders to file when they acquire an interest in property, for example through foreclosure or repossession, that was used as security for a debt or have reason to know that the property has been abandoned. File Form 1099-A, acquisition or abandonment of secured property, for each borrower if you lend money in connection with your trade or business, and in full or partial satisfaction of the debt, you acquire an interest in property that is security for the debt, or you have reason to know that the property has been abandoned. You need not be in the business of lending money to be subject to this reporting requirement. Truth is, you have money under your SSI hash in stock issued at birth by government. Then they make theirself the executor of the stock. I've been studying this for several months and happened to find a government website with the information, and it does stay at the top. Once you gain the knowledge of this information, do not abuse it. And then it has a list of how to buy homes, cars, property, abandoned property, foreclosed property, and unsecured debt. A new car that you purchase is an unsecured debt. If the paperwork is filled out correctly and given to the car lot, it can be turned into the government, and the government will not void on an honest debt. Legally, you are making the car lot a temporary executor of the stock it takes to honor the value of debt that is unsure whatever it is. I'm getting ready to fill one out myself and try it and see if it works. It'll be the first time I've ever got anything free from the government because they've done nothing but stolen my money, freedom, and life since I was born. This is an example of how things work when you or your spouse go to a bank and ask to apply for a mortgage, and let's just say hypothetically you get approved for a mortgage. So what the bank does in return is file a 1099-A acquisition of property on you or your spouse's behalf, and they use your social security number as a lien to redeem the funds directly from the Treasury. They include the full amount, also interest as well. You have already paid for the house once you have given them your signature. But that's another conversation. So once your monthly billing cycle comes from your monthly mortgage payments, the bank will then charge you again for money they already received after they filed a 1099-A using your SSN. What people don't know is your social security number gives you the exception to discharge debt because all debts and obligations of debt is the responsibility of the federal government. See Public Law, Chap 4848 Stat. 112 inches under HJR 192 is that remedy, and in part states that the federal government will discharge all our debts, public and private, dollar for dollar. So this remedy is our way to understand negotiable instruments and how money is created. The way money is created here in the United States is by debt. In every situation, there is always a creditor and there is always a debtor. For every transaction regarding a creditor and debtor's relationship, it's established by the idea that every creditor needs a quote-unquote surety of payment. So once you go into dealing with any company to qualify you for any loan, they want to know that you are a good candidate for the surety or repayment of the debt. Remember this, there is no money, and money is created through debt, and debt must have a bond. Now, since we broke that down, here's what you can receive using a 1099-A form. You can purchase a home, car, truck, boat, etc. First and foremost, people understand who you are and understand what your Social Security really is. Another thing you might not know is you can file a 1099-B to reclaim your bank deposits. In most cases, a 1099-B form provides information about securities or property involved in a transaction handled by a broker. This includes a brief description of the item sold, such as 100 shares of XYZ Co., the date you bought or acquired it, the date you sold it. If the state issues you a refund, credit, or offset of state or local income, that amount will be shown in Box 2 of your 1099-G form. The most common reason for receiving a refund is because of an overpayment of state taxes. Is 1099-B earned income? No. 1099-B reports capital gains and losses. A capital gain or loss results from selling an asset you own, such as a stock option, or bond. The IRS works with private collection agencies, the Inquisition Revenue Service, who collect taxes for the popes of Rome. In the Bible, Matthew 22:21 says, "They say unto him, Caesar's. Then saith he unto them, Render therefore unto Caesar the things which are Caesar's, and unto God the things that are God's." The Internal Revenue Service is the revenue service for the United States federal government, which is responsible for collecting U.S. federal taxes and administering the Internal Revenue Code, the main body of the federal statutory tax law. When did Americans start paying income tax? The first personal income tax was imposed by Congress in 1861 to raise revenue for the Civil War, to help pay for its war effort in the American Civil War. It was part of the Revenue Act of 1861, 3% of all incomes over $800 rescinded in 1872. Americans were supposed to stop paying taxes after the Civil War, but the government never stopped the request. You might want to look into House Joint Resolution 2841. The IRS will be stealing people's bank accounts under this bill in the future. A stock represents fractional ownership of equity in an organization. It is different from a bond, which operates like a loan made by creditors to the company in return for periodic payments. A company issues stock to raise capital from investors for new projects or to expand its business operations. A bond is a loan to a company or government that pays investors a fixed rate of return. The borrower uses the money to fund its operations, and the investor receives interest on the investment. Stocks represent ownership of a company, while bonds are a loan to a company or government. Stockholders can profit from selling shares at a higher price than they paid, or by receiving dividends from the company. Bondholders receive interest payments regularly, and the principal amount is repaid when the bond matures. Stocks are generally riskier than bonds because they can fluctuate in value more. However, bonds can lose value if the borrower has financial trouble and defaults on the loan. Bonds are rated by credit rating systems like Standard & Poor's and Moody's to help investors understand how risky they are. The year was 1865. A nation, still reeling from the wounds of a brutal civil war, found itself united in grief. Abraham Lincoln, the 16th President of the United States, lay dead. A bullet, fired by the infamous John Wilkes Booth, had cut short Lincoln's life and plunged the nation into mourning. This was a man who had guided the country through its darkest hour. Now, he was gone. While the official narrative points to Booth as a lone actor driven by Confederate sympathies, whispers of a deeper conspiracy began to circulate. Could it be that John Wilkes Booth was merely a pawn in a much larger game? A game played by forces far more powerful and insidious than a lone actor seeking revenge? Some historians and researchers believe that there is more to the story than meets the eye. They point to powerful financial interests, particularly the Rothschild banking dynasty, as potential orchestrators of Lincoln's assassination. The motive? To eliminate a president who dared to challenge their financial dominance. While the evidence remains circumstantial, the theory of a Rothschild conspiracy surrounding Lincoln's death continues to intrigue and provoke debate. To understand this theory, we must delve into the alleged history of the Rothschild family's involvement in American affairs. The Black Hand families and their main front family, the Rothschilds synonymous with wealth and influence, rose to prominence in the 18th century, like we said already. Originating in Frankfurt, Germany, their banking empire expanded rapidly across Europe. Meyer Amschel Rothschild strategically placed his sons in key financial centers, London, Paris, Vienna, Naples, and Frankfurt. This positioning established a financial network unparalleled in reach and power. The Rothschilds, through their vast network, are said to have financed wars and revolutions. Their influence, according to conspiracy theorists, shaped the political and economic landscapes of nations. Andrew Jackson, the so-called 7th President of the United States, was a man of the people. The Black original Native American would disagree. Andrew Jackson was a part of the Trail of Tears. The Trail of Tears was the forced displacement of approximately 60,000 people of the 5 civilized tribes between 1830 and 1850, and the additional thousands of Native Americans within that were ethnically cleansed by the United States government. He distrusted centralized power, particularly in the hands of banks. Jackson believed that banks held too much sway over the economy and the lives of everyday Americans. During his presidency, Jackson waged a fierce war against the Second Bank of the United States. He vetoed the bank's charter renewal, famously declaring, "The bank is trying to kill me, but I will kill it." This was a bold move made by Jackson. This made the Black Hand mad. He was against centralized banking. Andrew Jackson has appeared on the $20 bill since the series of 1928. The placement of Jackson on the $20 bill is considered ironic. As president, he vehemently opposed both the national bank and use of paper money. After the president of the Second Bank of the United States, Nicholas Biddle, defied Jackson and requested the renewal of the charter of the Second Bank in an election year, Jackson responded by making it a goal of his administration to destroy the national bank. Jackson prevailed over Biddle, and the absence of the Second Bank contributed to a real estate bubble in the mid-1830s. The bubble collapsed in the Panic of 1837, leading to a deep depression. As the Civil War raged on, the financial underpinnings of the conflict became ever more critical. The need for funds to support the Union's war effort was immense. We had to find ways to finance this war, no matter the cost. The stakes were too high to falter. The Rothschild banking family, with their vast resources, loomed in the background, ready to offer their financial assistance. But their involvement came with strings attached, influencing the very fabric of the nation's economy. It was a delicate balance. Accepting their help meant entangling ourselves in their web of influence. Yet the war left us with little choice. The shadow of the Rothschilds extended over the financial decisions made during this tumultuous period, shaping the future of the United States in ways that were both seen and unseen. With the Civil War behind them, leaders began to question the financial systems that had emerged. The debate over the central bank and its influence was far from over. We must ensure that the power of the people is not undermined by the interests of the few. The financial order must serve the many, not the elite. Reform is essential. We cannot allow the mistakes of the past to dictate our future. The nation's financial integrity depends on it. The push to challenge and reform the financial order was a battle in itself, with leaders like Lincoln and Chase at the forefront, striving to create a system that was fair and just for all. To sum it up, Lincoln got one in the back of the head because he bankrupted the USA Corporation in 1865. He was taken out by the world bankers for messing with their money and